A sharp peak can often be more suitable context for a fib extension. The rapid start to the downtrend results in a moderately large base trend and validation of the 0.5 level with several upswings. As usual, validation can also take place within a wider range, especially when multiple fib levels approximate areas of wide price fluctuations in the past and present. Like normal, a fib projection produces similar results from the same base trend range. In this case, the projection is slightly better, mainly due to the positioning of the 2 level, more closely approximating the start of the new uptrend. Validation is also possible with its levels below 1. In this case, the 0.5 level also coincidentally provided further validation, except with a downswing in mid-2014. As with any other technique, the choice to add a fib retracement is optional. In this case, the primary area of interest is not approximated as well by a fib retracement compared to the previous routes covered. Results are better for a fib retracement based on a smaller downtrend that has more swing points covered before the start of the new uptrend. The new uptrend has fairly decent coverage with a narrow fib projection based on a sharp but relatively small initial upswing in June 2016. A fib extension using the small base trend has similar results due to the uptrend remaining relatively stable and not significantly increasing in volatility after moderate bullish accelerations in 2017. This example has shown familiar situations where fib retracements are generally complementary to extensions and projections. Large fib retracements derived from steep trends with few swing points are generally not suitable alternatives to extensions and projections that can cover more detail and precision from small and large movements.